What's up, traders? Zach here from the Trading Network. I hope you guys are doing well. I am back with yet another scalping video or a trade breakdown for you guys. Now, I did actually record a breakdown of this trade while it was taking place live in real time, but unfortunately, I could not get my camera up in time to make it a full video, if you will. So I decided that I would go ahead and pull my camera up and play this recording back and break down these technical confluence factors for you guys so you can once again get an idea of the setups that I'm taking, the setups that I'm looking out for, how I always have specific parameters for every single setup that I am looking to take advantage of. And this is how I gain immense confidence, or have gained immense confidence in my edge throughout the years, and trust it inherently. There is no second guessing. There is no inner dialogue asking myself, is this the trade? Should I take it? Should I sit on my hands? None of that happens. Once I see certain technical factors take place or present themselves, I know that that is my edge presenting itself, and without a second thought, I hop into this trade and I take advantage of the setup. So what I'm going to do here is I'm going to break down these technical checkboxes or confluence factors, whatever you want to call them, and I'm going to talk to you guys about why this was such a great trade, such a high probability trade from multiple aspects, great risk to reward, etc. So I'll go ahead and click play here, but one thing that I want to explain as this trade begins to play out is the overall market context. Now, prior to this, we had a downtrend, right? And I actually took a really nice short in the downtrend that I will also be posting a video breakdown for. But I want to show you guys this trade first. So you can see here, we had a nice downtrend rejecting the opportunity zone to the downside. The opportunity zone was nice and wide, showing that the trend was strong and that we did indeed have directional conviction. Now, we moved down and we moved actually into a prior range high that you can see here over on the right side of the chart, this 11,983 level. This was the range high from last Monday's New York session. That was January 23rd. That was the range high from that session. So price moved down and we ended up tapping the range high from that session, which ended up being the low of this current move, okay? So once we move into a major market profile level like this 983 level, we put in bullish divergence, right? You can see that here on our oscillators. You can see that here on multiple oscillators, as well as our delta down there at the bottom. After we put in our bullish divergence, we then get a higher low. Now, if you guys are members of the Trading Network private community, if you have taken our Fundamentals of Futures Trading course, you would know that this indeed is what we call a three-step shift. Step one is a directional move, in this case to the downside. Step two is bullish divergence, right? Step three is the higher low after the bullish divergence. This three-step shift is an immensely high probability pattern or setup that tells me that, once again, the market behavior is likely changing or shifting. And in this case, it was a shift from a clear downtrend back to an uptrend. Just to be exceptionally clear here, when we're in a downtrend, we're making consecutive lower highs and lower lows, right? The first signal to me that we are changing that behavior is we put in bullish divergence and then a higher low after the bullish divergence. Now, I want to be very clear here. Do not blindly take longs when you see bullish divergence in a downtrend. More often than not, it is a straight up trap. Now, what helped me over the years understand the difference between these trappy bull divergence setups in a downtrend versus a true reversal signature is the higher low that is after the bullish divergence. Now, in today's case, we had price move down to a major profile level, right? It was a prior high from last Monday, a week ago. It was the high from that session. And then we put in a higher low after that. So if we move down and we tap the liquidity at a major area that hasn't been tested in a while, and then we proceed to put in a higher low, that tells me that once again, market is likely changing behavior here. So not only did I wait for this higher low to be established, but I waited for price to move up to prior profile levels, or in today's case, current profile levels, as well as some moving averages and a VWAP deviation. So this purple level here, that is the 200 exponential moving average. this dark green level here, that is the first lower deviation of VWAP. You can see VWAP is all the way up here, and this dark green line is the first standard deviation following below VWAP. So we moved up. We initially rejected the current point of control and the current initial balance low from today, January 30th. Then we moved back down to retest this prior area of resistance, and we confirmed that area as support. So we have a three-step shift. We have bullish divergence, we have a higher low, we have price using a prior recent resistance level now as support, and we have a value area as well that acts as another line in the sand. So what I did here was I took it upon myself to get an entry inside of the opportunity zone, because I was thinking that if this indeed was going to hold up, we were very likely to move through this prior high that we just created or established and back into the overnight low from last night, which was right here at 12,039. So this is again how I am using a combination of market profile levels in addition to other things like moving averages, like oscillator structure, like volatility oscillator structure, as well as momentum oscillator structure, to help me paint a really strong picture in regards to where price is likely to go and have probability on my side, right? So after I entered this trade, I'll go ahead and click play here. You can see that I needed to risk very little to figure out whether or not this trade idea was going to be correct, right? Could I have moved my stop loss below the value area low? Absolutely. I think that would have been a fine spot to have it. However, because I was in at the bottom of the opportunity zone, and the opportunity zone, generally speaking, is going to be my invalidation area, or a break below this support resistance flip area was my invalidation point, right? You can see if I draw a line there, that was basically, the support resistance flip area where price moved, rejected from it initially right here, and then came back down and used this area as support, in addition to utilizing the op zone as support as well. So we have all of these confluence factors. We have moving averages in our favor. We have the BBWP, which is a volatility oscillator, in our favor, showing that volatility is likely to expand. We have delta going from neutral to positive down here. We have the opportunity zone forming as support, seeing local lows being put in, higher lows being put in around the opportunity zone, around the current value area low. And once again, we have this support resistance flip where price was using a prior area of resistance and now testing it as support. So those are the confluence factors that I was looking at. Now, we also had what we refer to in TTN as a probe, which is basically just a diagonal trend line. When you have a downwards diagonal trend line that gets broken to the upside, that is a signal, once again, that further upside pressure is likely. So if I go and I click play on this trade once again, you will see that I am risking a solid 5 to 6 points on this trade, and I am targeting 20. Incredible risk to reward, especially for an intraday trader, right? Most of my trades are, between a 1 to 1 or a 1 to 2, which means that I'm risking, 5 points to make 5 points, or I'm risking 5 points to make 10 points. This is even better than that. This is an even higher probability opportunity with great risk to reward, because my stop loss can remain nice and tight. And you see that I eventually just start to trail my stop loss on the 50 EMA, once again, because that is my invalidation area. And then once we get, within a handful of points within my target, I actually got a touch no fill here. So you can see that price moved up to my target level, did not fill me, which can, be a tilt trigger for a lot of people. And I continued to just stay solid. I tightened up my stop loss quite a bit, because I don't really want to give back a lot of this profit that I've already locked in, so to speak, just for, another 3 points. So what I did was I tightened up my stop. I attached it to the price line minus, 10, 15 ticks, something like that, to have a little bit of an offset there. So basically, if price were to come down and, touch or take out the low of this prior bullish bar, that would have gotten me out, and that would have likely signified that a little downside move or a pullback was likely as well. So you can see here at this point, I've got the touch no fill on my take profit here at 12,037. I am front running this prior overnight low at 12,039 by just a couple of points. First test did not fill me. You guys will see very, very shortly that I did indeed, don't want to spoil it, but I did indeed get filled on that TP there. And price does continue even further to the upside through these major levels. But this is the setup that I wanted to break down for you guys. It is immensely high probability. If you can understand the market context, if you can use the market context to your advantage to see when behavior is shifting, in this case from a downtrend into an uptrend, you can have immense probability on your side. You can have very tight risk to reward, which allows you to take these setups repeatedly. Even if this doesn't work, I am already prepared to take another entry on the test of the value area low here. But why risk more than 5 or 6 points if that is a clear area of technical invalidation, right? My area of technical invalidation was a move below here. And if we moved below this support resistance flip area, then we're very likely going down to test the value area low. So I'm just saving myself a handful of points and allowing even better risk to reward in this situation. So this video is really not complicated, and I'm going to be able to keep it pretty short and sweet. Looks like we're right around 11 minutes right now, but this is the idea of the setup. Once more, I'll rewind so you guys can see the zoomed out structure here with the 3-step shift. There we go. So once again, 3-step shift. We had a clear downwards trend. We had a directional move to the downside. We came down and we tapped a major area of liquidity, which was last Monday's regular trading hours high from the New York session, okay? That was at 11,983. We put in bullish divergence at this area, right? We also established a low for the day in that area. That's not going to get me in. This is a totally fine entry, and in hindsight would have been a great entry as well. Entering on the higher low that is confirmed after the bullish divergence is a great entry and a great opportunity. I just was not at my desk when this low printed, and I came back and I saw that we had this setup, another retest, retesting this previous resistance area. So will I look for an entry on the higher low in the 3-step shift? Absolutely. It's an amazingly high probability setup. And for example, could have entered here on the local low with the stop loss below here, oscillator structure looking beautiful. You know, you could have targeted prior swing highs and or any of these levels to the upside. But once again, didn't get in here. I waited for a pullback into the opportunity zone. I knew what I was looking for when price was up here. I wasn't going to FOMO in all the way up here. I mean, look at the oscillators. They're already ready to curl and cross down. I wanted to wait for a reset of the oscillators, for these guys to bottom out, a reset of my volatility indicator as well to show me that volatility had compressed and it was ready to then expand once again. That is my cue. So I have 1 checkbox, momentum oscillator. I have 2 checkboxes, volatility oscillator. I have 3 checkboxes, divergence on both the oscillators here, and I also have divergence on the delta, right? Price is moving down, the delta is moving to the upside. I also have appropriate candlestick structure in the form of a local low in or around the opportunity zone. I also have a probe. So that's 1 checkbox, 2 checkboxes, 3, 4, 5. And we have a major level in the area that I could have used as protection. And if you want to call it a 6 checkbox, I used the market context, or I was trading in the direction of strength in this current move. So that is 5, 6, maybe even 7 checkboxes, technical confluence factors in my favor. This is how you can clearly determine when probability is on your side. This is a way that you can gain confidence in what the market is telling you. You can train your brain to recognize these repeatable patterns, and trust me, they repeat all the time, multiple times a day, several times a day even. And this is how over the years I have gained immense confidence and trust in my edge. I see my setup, I pounce on the opportunity, I let the market do its job, whether it stops me out or gets me paid. That is not my choice. All I can control is where my entry is, where my risk is, and where I take profit. And those are all based on clear confluence factors, market profile levels, oscillator structure, candlestick structure, etc. Now, I might sound like a broken record, but I think it's important to put all of these things out there in a way that is easily absorbed and easy to remember and easy to remind yourself when you guys get into a situation where you can trust your edge or use our edge that we teach in the Fundamentals of Futures Trading course to build confidence for yourself with your own trading. So with that said, I'll go ahead and wrap this video up here. We're just once again to show you guys, this indeed played out pretty quickly. I was in, let me just see. So maybe the trade took a little bit longer than I initially thought. So I was in right around like 9:04, somewhere around here, right? 9:04, 9:05 maybe. And then I took profit, well, maybe it actually was right around 9:09, between 9:08 and 9:10. So 9:09, we'll call it. So this actually was about a 5-minute trade where I was able to capture 20 points with 3 contracts, locking in about $1,200 on NQ. Immensely high probability setup. This is once again a setup that we teach in our Fundamentals of Futures Trading course. Multiple structures that we saw to set up this opportunity came from or comes from the Fundamentals of Futures Trading course. So I would strongly suggest, if you guys do not have strategies, if you do not have multiple forms of edge for varying market conditions, if you do not have a trending setup, if you do not have a ranging setup, and if you don't have a reversal setup, I would suggest checking out the Fundamentals of Futures Trading course. You can get it on our website at thetradingnetwork.io, and it has helped a tremendous amount of traders shape their trading in a way that they can continuously and consistently trust their edge on a daily basis. So with all that said, I want to thank you guys, as always, for taking the time to watch this content. If you do find value in this stuff, I would greatly appreciate it if you would like, subscribe, and click that bell notification to be notified every single time that we post videos here on the channel. And if you guys want to learn more about what we do here at the Trading Network, if you guys would like to join our private community, if you guys would like to gain access to the Fundamentals of Futures Trading course and learn these strategies, check out thetradingnetwork.io, where you can, of course, purchase access to our most popular offering, the TTN Pro Trader Bundle, which includes lifetime access to our private Discord, access to our Fundamentals of Futures Trading course, and access to our proprietary indicator package, where I teach the momentum flip, the opportunity zone, which we discussed here, as well as the 3-step shift, which we also briefly discussed in this video. In addition to these products as a bundle, you can purchase them on our website standalone as well as one-on-one mentorship with me, where we have specialized and individually catered one-on-one Zoom sessions for my most popular programs, which are a 4-week mentorship program and a 10-week mentorship program. So if any of these things interest you guys, please feel free to drop a comment down below with any questions. You're also welcome to email us at info@thetradingnetwork.io. You can also shoot us a message on Instagram if that is easier, and you can find our social links down in the description of this video as well. Thank you guys, as always, for taking the time to watch this content. I greatly appreciate it, and I look forward to seeing you in the next video. Cheers.